Millions of Americans have access to retirement accounts called 401ks, and they might finally be able to invest straight to Bitcoin, cryptos, or even precious metals. And this is what I would like to talk about today, since it's a big deal. So, after the whole crypto week, we do have some headlines talking about how Donald Trump may be able to push legislation to change the way uh, pensions or 401k accounts, 457s, 403bs, and all of those retirement accounts that are sponsored based actually work because they are restricted in the kinds of funds that you're able to invest. They mostly invest in stocks or bonds and not really anything else. So this would allow them to tap into alternative assets, including Bitcoin. So since I did have a lot of experience for that matter, I worked personally with 401k participants all over the country, so I can say exactly a little bit of the dynamics here. So first off, it's pretty interesting what happens in 401ks because most Americans don't really know how they work. So even though it's basically most of their savings when they retire, some people are not even aware how they actually grow, and they think it's just about their contribution. So 401k account, for those who are outside of the US, it's basically an account where you contribute a percentage of your salary, of your paycheck every 2 weeks normally, and then you also have a certain match depending on the plan based on your employer. So the better the match, the better benefits you're able to provide to your employees. It's kind of a tool for to retain your employees and provide some benefits, and that these funds, they get automatically invested into an allocation that would be chosen by the new worker. But the problem is most Americans are just too busy, so they don't really take into consideration what to invest in. They don't even know. That's one of the that's a topic for another video. But normally it just goes to some index funds like Vanguard, like BlackRock, like an S&P 500, or a bond fund, or a target date fund for that matter, where it just splits between stocks and bonds. Nothing really else. So unless you're knowledgeable about the market, trying to get a rollover to another kind of account and get exposed to Bitcoin or do whatever you want to do in an IRA, for example, which would be an individual retirement account, you're kind of locked. And that liquidity is not even part of M2 that most Bitcoiners talk a lot about. So this would untap a lot of liquidity. So the way that the 401ks are important, it's because we have $9 trillion of contributions that also are growing over time, where these funds just push the stock market up because they don't really think about winners or losers or the best options or the best stocks. And also bonds, they also purchase bonds because the more based on your age on a target date fund, the more you get to that target date when you are intended to retire, the more bonds you buy and the less stocks you also buy. So you always change that that percentage. And this passive inflow comes from within the United States. And outside of the United States, we just have hedge funds just investing in the United States. So which creates a huge passive inflow of funds into those markets. However, most of those markets do not tap into Bitcoin at all. And once it changes, then we can see a huge move on those markets, but depending on very, very specific conditions about the 401k industry. But before we get into that, we also discuss that until our latest report that we're going to be releasing in a couple of days. But here you just see we have a great report so far, the report number 20, that we show Bitcoin cycles, many charts done by Sina, myself, and also Wizard. So you can really see everything that's going on with monetary mechanics, also inflation, and all the macro strategies, so you can actually act on your investments. So if you're interested in that, just make sure to click on the link on the description below as well. All right. So This dynamic here is extremely important for you to understand how passive investing works. So normally you have your paycheck coming in your 401k, it goes straight to passive index funds like S&P 500 or just bonds, and then these funds auto buy stocks. So they just dilute into every single one of those stocks, regardless if Apple, if Microsoft, or whatever. And the more money they get, the more they concentrate into the importance inside the index, and it creates kind of a vicious cycle. That's how stock prices actually rise, and that's why the United States, the U.S. stock market, is so much bigger, factors bigger than every other stock market in the world. And this attracts more investors to passive as well. So this is why passive is such an important flow of funds that just presents a lot of unfair advantages of those companies that are part of the S&P 500. But once we have a different approach on what you can actually do with your 401ks, and you actually get more interested in that, like Bitcoin, for example, or even gold or whatever, this could change a lot of that dynamic. So it's going to be really interesting to see, because it depends on the education of those participants that have 401k accounts to understand, look, I cannot invest in Bitcoin. I don't know how to do it. But if I just see a fund, even if I don't have the real asset, I can still be positioned to take advantage of the pricing. And I did have many people who were asking for that possibility but couldn't. And you can see things like this, threads like this on Reddit, for example. People who try to transfer their 401ks to Bitcoin, and they think everything is a scam, because it's a very specific approach. Every 401k account is different. It depends on who the record keeper is. It depends on how much your employer did expand, because some plans allow you to have a rollover, for example, while you're employed, but most of them only allow you to make any withdrawals after you separate from the company, after you get terminated, and then you were able to roll over to another account. So why would you keep funds over there? Because they are tax deferred, so the money grows without any tax implications until you are 59 and a half. Can you withdraw earlier? You sure can. So let's say if you lose your job before 59 and a half and you want to take part of it, you're able to do so, but you pay a penalty of 10%, and then still the taxes on 20%. I still remember the rules, but a lot of things may change. Some people would just roll over to IRAs where they have a little more flexibility there and choose what kind of investments they have, but the options are still pretty limited. But once you have, for example, other funds or even passive funds that go straight to Bitcoin, as we're seeing, you might even have people who are currently investing in Bitcoin without even knowing, and just reaping the benefits of the price action of Bitcoin. So this is going to create a very interesting scenario, macro wise, and a positive effect for Bitcoin adoption, even if it's not really the way most Bitcoin enthusiasts and or the community actually intends it to. But maybe another thing to take into consideration is that, for example, when you had a hardship, there are some specific accounts that allow for a hardship withdrawal. So you're still employed, or and you need some cash based on an emergency. And sometimes it has to be medical. Sometimes it's just based on your financial conditions. You may be able to apply for a hardship withdrawal where you're not penalized. Most people just are anyway. So, but this chart shows a concerning trend of more and more Americans breaking into their 401ks before the actual target date of 59 and a half, because they're not able to make ends meet. And this can create a problem, because the same way that you have this kind of of cycle here, which creates a positive cycle into 401ks, you can have the opposite, because the more you buy, the more prices go up, the more it attracts passive investors, and that's how basically the automated algos work as well. But when you start to have some withdrawing from 401k participants, and all of a sudden that price starts to go down, and the stocks, the biggest stocks lose a little bit more market share inside the index, then you can create the opposite effect, which can bring everything down, and which creates a lot of problems, especially for investors abroad as well. Think carry trade, think all of the investors, all the hedge funds worldwide. So this is one of the bigger risks for liquidity onto that matter. So this is one of the ways that the financial markets actually collide with the real economy, people who are not making ends meet in the United States. So this is also pretty interesting to see. It's one of the things that I'm tracking, but it's still really going upwards. But again, extremely interesting. So really we have to see if people are going to be aware of that, and the more aware or educated they are and how they can change that allocation into Bitcoin within their 401ks, they would be able to invest in Bitcoin in a tax deferred way. So they can reap all the benefits, not be concerned about capital gains taxes at all, since it's the fixed, it's mostly a fixed amount of 20% taxes when you withdraw once, if it's pre-tax. Some people just do the Roth, which is also tax-free afterwards. So many options that Americans are going to have. So these are interesting times to see what happens into how many, what percentage of that 9 trillion is going to go. But anything that happens, it's going to be huge, since Bitcoin is still pretty young in what comes to worldwide liquidity. All right, see you in the next video.